And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial, investment, retirement future. Also planning from a tax perspective, as we will talk about on today's program. He is president and founder of McIntire Retirement Services, Chris McIntire. Always a pleasure to see you, Chris. How are you doing?
Hey, I'm doing real good here, Peter, and happy to talk about anything other than SpaceX for a change.
Indeed, that definitely has been the news of the day, so to speak. But it's been going on for a while. A successful launch for Elon, but rockets don't stay up forever. We'll see where it goes from here. Who knows? However, Chris, today we're going to talk about something that is much more strategic and predictable. It's kind of black and white. You can either choose to plan for taxes or you can ignore them and have the IRS's plan enacted upon you. Now, before we get going in this, what I think, Chris, is one of the most important financial conversations people can have, there does seem to be kind of a relic of the past. And tell me, do you think it's antiquated when you hear somebody say, well, my financial advisor won't discuss taxes with me?
Yeah, and you'll hear some of those caveats from time to time when we're calling in, helping clients do a 401k rollover, and they may bring up something about, a tax situation, and, the headset advisor says, well, we don't give tax advice. It's like, well, can you call yourself an advisor if you're not helping people plan their taxes is probably a rhetorical question, obviously.
Yeah, well, I think it's today maybe one of the most relevant and important planning and management conversations that can happen, because the opportunity, Chris, to save on taxes and keep more of our money, it can be as impactful and effective as shooting for higher returns, but generally with far less risk, because we're working within the tax code, the black and white. And unfortunately, because of that antiquated relic of the past and not kind of connecting the financial and tax conversations, it is an opportunity that a lot of people are missing out on that can cause a cost of substantial additional dollars over our retirement lifespan. So before we begin and really get into this conversation, I do want to make a couple notes, Chris. First and foremost, ladies and gentlemen, if you would like a Roth roadmap for your retirement, if you are looking at how to best manage your investments and your taxes and keep those connected, give a call. Start the conversation with Chris McIntire. You want an experienced, qualified professional working on your side who's not just a headset advisor, knows your name and your situation, not just an account number. You can start the conversation and get your game plan for retirement mapped out by calling 419-332-0532. 419-332-0532. 419-332-0532. I also want to make note that we do have a special guest in store and planned for today's program. So we will be joined a little bit later, hopefully, by the president and CEO of Brookstone Capital Management. Now, that's a name that you've heard here on the program before, Brookstone, but the president and CEO, Dean Zayed, will join us on the show in just a moment. But talk a little bit about what Brookstone is and what kind of tools they give advisors access to that are helping clients achieve their important financial goals, which, Chris, again, I think we'll probably talk about the interconnection between access to the market, taxes, and even the legal planning aspect, all things that you bring together there at McIntire Retirement Services.
Yeah, Brookstone, helps support people like me that want to be independent advisors, but need resources and infrastructure behind the scenes, investment research, compliance, issues, right? We live in a very regulated industry. So they have all of that regulation needs behind them, research, investment portfolios. So they help support our being independent, and they don't tell us what to do whatsoever. They support us as being independents. That's their niche in the marketplace. And, Peter, a lot of our buddies, we call them, over the years, we've all, been at different platforms, and many of us have landed at Brookstone because of the independence, the support that they give us, and just the way that they treat us. And matter of fact, we just bought breakfast for their entire staff. I've never spent $800 on breakfast, but we're happy to do that for them.
Wow, what a gesture and gift! I'm sure they were appreciating all of that morning, Chris. Well, again, we'll have Dean on the program. He's going to give us a little under the hood, behind the scenes look at Brookstone, some of those tools that you're talking about, Chris. But again, one of them is bringing all of the pieces of the picture together. And I know that you are a self-proclaimed tax geek and help people understand and map out Roth opportunities. Now, I want to start this conversation, Chris, by saying I hear from a lot of people who kick themselves for not having all of their savings in Roth. Has deferring our tax in traditional IRAs and 401ks been a mistake and some huge oversight that people should regret to this point?
Well, Peter, let's be fair. And, we live in an industry of hindsight because, hey, why didn't we all buy this stock way back when, right? So, we don't like to use the word should because it's a dangerous word, right? We don't want to live in the world of I should have, I should have. Um, if I take somebody right now who is age 75, for example, and they've got $500,000 in their IRA account, okay, probably fair to assume when they started putting that money into that 401k account years ago, they were in a much higher income tax bracket than they are now. Okay.
Yeah.
And, I think we've made the argument here that, look, tax rates now are, historically low. Should people who are working right now be considering making those contributions into the Roth 401k or Roth IRAs? And then obviously we have the ability to convert money from an IRA into a Roth. So, it's hard to say that what they did was wrong because they forced, there was forced savings that they were doing on themselves. They were disciplined, and now we deal with the tax ramifications. So, in hindsight, I suppose they probably should have opened up and had some money in several different buckets, the tax-free bucket, the taxable bucket, that sort of thing. And that's what we have. I still contribute money to a 401k because my income is high,
Yep.
and I'll
The
worry
Roth
about some
wasn't
of
even
that later.
around for as long as the traditional options were, right?
Yeah, I think 1985, Senator Roth, and I forget the other politician that was part of all of that. Obviously, that was in 1985. Believe it or not, both our political parties could actually get something done. I'm making a joke of that today, of
Well,
course.
and it wasn't even until like the mid 2000s where it became available in most 401k plans, I believe.
Yeah, absolutely. And I'm over the age of 60, so my extra contributions into my 401ks have to go into a Roth IRA, Roth 401k now. So, there's a lot of parameters here when we're talking about the Roth side of things. So, from a 30,000-foot tax level, okay, and I'm going to use married filing jointly, and I got my tax sheet here. So, this year, married filing jointly, the top of the 12% tax bracket is $100,800. Okay. They also get a $32,200 standard deduction. That means the first 32,200 you don't pay any tax on. So if we add 32,200 to 100,800, we get $133,000. 30,000-foot level is the top of the 12% tax bracket. So if you've got $100,000 of income, you can pull out another 30,000 and not be in a different tax bracket. So you could move that money, pay tax at 12%, put it in a bucket over here where it will never be taxed again
Yeah.
for you or your beneficiaries.
Great opportunity. And Chris, that understanding of where the tax brackets fall and where our income lies within them is part of the planning process that you do there at McIntire Retirement Services. And probably a Roth conversion consideration is not an all or none or all at once consideration. It is strategic over a period of time.
Yeah, good point. So, and the example I just gave was $30,000. It depends where people's income's at, what they're comfortable paying taxes on. Most of us have the mindset to delay paying taxes for as long as we possibly can. And that's why your IRAs and 401ks are the number they are. You've never paid any tax on any of that money until you go to take it out. Now, if you wanted to buy a condominium in Fort Myers for $400,000, right? You're probably going to take a mortgage out versus one big withdrawal on your IRA because of the tax consequences. So, it's something that you have to manage year by year. We do a lot of Roth conversions here in the practice. We're here in the middle part of 2026 right now, and we'll do more Roth conversions as we get closer to the end of the year, where people know how much money they've had, based on income from wages or IRA withdrawals, that sort of thing. So, we kind of want to wait until we know what's the story looking like as we close out the chapter of 2026, and then how much income can they have and still be in that same tax bracket, for example. And then we work with some good CPAs that really help us with this as well. And, they're a little more proactive. Sometimes, if you walk into your garden variety tax preparer, they're just going to say, okay, here's your taxes, sign here, mail them in. They don't get into tax planning. So it's nice to have some good CPA relationships as well.
Well, once again, ladies and gentlemen, the opportunity available to us with Roth is black and white. It's in the tax code. It's a matter of, do you take advantage or don't? But taking advantage can be a significant opportunity. A substantial amount of money can be saved by controlling your taxes. It just takes that proactive approach and a trained, qualified professional eye. And if you'd like to sit down and map out your retirement Roth roadmap and get your game plan for retirement, pick up the phone and give Chris McIntire and McIntire Retirement Services a call, 419-332-0532, 419-332-0532, 419-332-0532. We're going to take a quick pivot here. We are now joined by Dean Zayed. He is the president and founder of Brookstone Capital Management. Pleasure to have you joining us, Dean.
Oh, sounds great, Peter. Always a pleasure. I've known you and worked with you for a long time, as you know. So this is just going to be great fun.
Great having you on, Dean.
Yeah, we can go back in time together, 20 plus years. But essentially, I am an attorney turned financial advisor close to 30 years ago, and built a private wealth management practice side by side with my estate planning law firm. So Brookstone comes into play. It was really born out of the success I had as a financial advisor in my own practice, working directly with clients. And so about 20 years ago, actually, we're in our 20th year anniversary, the opportunity presented itself to me in the format of meeting hundreds, if not thousands of other independent, like-minded advisors that I thought needed a very friendly, sophisticated platform, and that's the key word, platform, through which they can conduct their wealth management business, and try to have some of the same success that I had in my own personal wealth practice. So the idea was born from my own personal financial advisory practice. I started Brookstone as this B2B platform. The industry usually calls us something more or less like a TAMP, a turnkey asset management platform. We call ourselves the first and only TAMP Plus in the industry. We add a plus because we do all those things that a normal TAMP does, which we can talk about. And then there's a bunch of other things that we do that are unique to Brookstone. But essentially, if you fast forward, here we are. We have 500 to 600 advisors that utilize the Brookstone platform, and we support every aspect of their wealth management practice, from compliance and marketing, investments, trading, intelligence. It's a comprehensive suite to allow that advisor who partners with Brookstone to really focus his or her efforts on building their business properly, using their time in the most advantageous manner, and really then partnering with us to do some of that real heavy lifting behind the scenes. That's the Brookstone story.
Well, Dean, I can't agree more with all of that. And thank you for the history. The way I describe it to my clients, one of the best affiliations of independent advisors across the country or anywhere in the world, and given us independent advisors all of the tools of a big box financial firm, but with the individual touch. And I think with your recounting the story of your own beginning and interweaving the estate planning practice with the financial and asset management, I think that begins to tell the story that clients need so much more than just access to the market. And when they call their source for financial advice, they want to be more than just an account number to a random customer service person. So that I think is really where you were ahead of the curve in recognizing the need for individual clients and where the business was evolving to.
Absolutely, Peter. No doubt about it. And the two words I use more than any other words probably in client conversations are the words independent and fiduciary. I think you know that, but it's important even after 30 years of doing this. Independence means a lot to us because it really does take off those traditional Wall Street big brokerage shackles. We are free to literally navigate the entire marketplace and the entire universe of investment options and vehicles and products that we deem to be best for the clients. And then fiduciary, of course, means we have the highest standard of care in the industry, both morally, ethically, and legally, to always do what's in the client's best interest. Not all advisors are fiduciaries. You take these two words and put them together, and you have the makings of a very special way that we can interact and help clients and retirees. Independent fiduciaries.
I'm going to throw one more word in there, Dean, that I know is really important to you, which is family. And your entrepreneurial mindset, I know drives you, but I know you've got another big drive and motivation behind that. And I've always really respected how close you are able to be and stay with your family while still maintaining the growth of such a phenomenal organization.
No doubt. I mean, Peter, family is everything, obviously. I know it sounds pretty, pretty cheesy and pretty predictable, but, when it comes down to it, I was raised in a very, very tight-knit family. Not just I have three siblings and, great parent structure, but my more immediate family outside of that, lots of aunts and uncles. And I was raised really in an environment that was so conducive to just loving your family, being close, and making sure that that was the top priority. Look, business is great. We're all in business in some format, and it's great to make money. We're all, successful in this industry. But business and money are nothing without the love and the support of those that are, in your life, the closest ones. Whether it's parents, siblings, spouses, kids, all of them have contributed to the cause, this Dean Zaid journey. I couldn't do what I do without family. So it's really good to look at the roots and the foundation. To me, of course, it is family.
Well, I've always appreciated and respected that and often marveled at how you strike the balance. I mean, I know you're up, you've got drive and motivation to get out of bed and hit the ground running every morning, kind of early, Dean,
Yeah.
but that you always make time for the individuals who have made all of this possible, and especially for those in your family, which I think that we all from time to time need a reminder of just how important that is. Ultimately, Dean, the money's the tool to support what's important to us, right?
Yeah, no doubt, Peter. And I'll say this. I'll be honest. I mean, I feel very lucky and very blessed that I found myself as a recovering attorney, as I say, turned financial advisor and wealth manager, and this journey that I've been on in business within the wealth management space. And I say lucky and blessed because it really is something that I absolutely love to do. I have a deep, sincere passion for the wealth industry, for helping clients, working with advisors, all the above, everything I've done. So it makes it really easy to balance and prioritize and wake up early, like you said, because I truly, truly love what we do. It's a calling for me, and I'm lucky that look, I could have still been a lawyer drafting documents or going to court every day, but somehow, some way, this path took me down a road where the passion is at an all-time level, and it's growing. I feel like we're just getting started. I have no interest in doing anything else, nor pivoting from what we've been doing together as partners.
Well, to form this firm, I think again you were ahead of the curve in seeing the needs of the individual investors, that they wanted to be more than just an account number. And over the last generation, access to the market has been democratized. You can get access almost anywhere, but true advice and bringing all of the pieces of the picture together for cohesive recommendations on what's best for the individual is really actually maybe even tougher to come by nowadays than before. Are there any specific things that you think individual investors are missing in today's financial world?
Well, let me answer that one way, because it's a great, great segue to just talk for just a minute or less about sort of the transition, the paradigm shift in the industry. In my dad's generation, your advisor was your broker who made stock picks or recommendations, and that entire relationship was transactional, and it was all about the portfolio, just trying to make money, right? Picking stocks and bonds and buying and selling, right? This paradigm shift, this world that we live in, fiduciary based advice, is not just, like you said, about just the portfolio, right? We've sort of democratized access to the market. ETFs have gone a long way towards that. And so, to answer the question, your advisor today ought to not just focus on the portfolio and returns. It's so many more things that we do at Brookstone and all the advisors. I'm going to name just a few key ones, right? Income planning, insurance planning, estate planning, cash flow analysis, tax optimization, social security optimization. These are all planning elements that are part of the relationship, but don't really relate necessarily just to that portfolio construction. If your firm or a firm out there today is just focusing on that sort of outdated 20th century brokerage model, they're way, way outdated. So today it's about advice, it's about planning. I think the missing link for the average American looking to retire is this idea around the complete planning suite that includes things like taxes, estate planning, insurance, annuity, social security. And that's what we've been really, really kind of at the pioneering forefront of at Brookstone.
I agree. You absolutely have. Bringing those services to the individual investor has been, I think, a very big benefit to their outcome and really helped them further their financial progress in ways that many investors really didn't even know about 20, 30 years ago. That being said, I know that there are also some specific investment tools that you are very proud of there at Brookstone, giving clients access to things that they may never have heard about before, running on that theme. Can you talk to us about the evolution of structured notes and then the BAM IX fund specifically
Sure.
that Brookstone advisors have access to?
Sure. Yeah, yeah. It's an interesting topic. So, in an era where we had near 0% interest rates in bonds for, a decade plus almost, structured notes are bank issued bonds or debt instruments with a twist, essentially. The banks create an experience that gives you this defined outcome where they're doing all the work and then packaging it up in this registered CUSIP security called a bond, a registered bond, or a structured note that might have elements of both bonds and equities. So I'll give you an example. They're able to pay you a lot more interest in a structured note if you're willing to lose some principal. Let's say if you link it to the market and the market goes down by more than a set barrier number, like 30% over a term, like a year, right? So, hey, instead of earning 4%, you can earn 12, but you'll lose money in that 12% note or bond if the market goes down by more than 30% in the next year, right? That's an example at a high, high level. Of course, there's more minutia to it. And so we've actually pioneered at the investment advisory fiduciary level the use of these very, very modern, sophisticated notes in portfolios, getting custom notes done for Brookstone through the largest banks in the world, building a whole strategy of laddering around them. And over a decade plus, Peter, it's been an extremely successful sort of fixed income hybrid strategy that has vastly outperformed your typical average bond portfolio. And that's us owning individual notes in client accounts. We just evolved the strategy to now create the first and only mutual fund in the country. The ticker is BAMX, BAMIX. It's called the Booster Income Opportunities Fund that takes this laddered structured note strategy and puts it into a more easy to access, convenient, actively managed, even broadly diversified fund that we are now a part of. And so it's very exciting. You see, structured products and structured notes are among the fastest growing vehicles in the country that nobody's heard of. It's gone from about 0 to 250 billion of issuance last year, issued by all the large banks that everybody knows, all the big names. And so Brookstone's been kind of a pioneer in the space, to be honest with you. Very proud of it, but more importantly, the results in the portfolios have been phenomenal.
Well, Dean, I know you are a busy man. I could chat with you all day here, but for the sake of time, you mentioned pioneering, and I've mentioned already staying ahead and being ahead of the curve. So, final question wrapping up here. I do want to get your thoughts on where the industry is heading next. What do you think about AI in the wealth management space, and how is it going to impact investors and advisors? I know that AI is the buzzword of the year, if not a little bit more, but do
Yeah.
you see AI impacting wealth management, investing, and access to the market?
I think AI is going to be awesome for the industry for this reason alone. Of course, we've always embraced technology, and it's just the latest series of just super sophisticated technology to enhance what we do as advisors and more or less free us up to actually do more work one on a personalized basis with our clients, more around that planning circle we've talked about here. So I do not believe AI will replace the human advisor. I am not worried about that. I think it's going to enhance what we do. The most important thing, clients, investors, retirees, 80 million boomers strong and the next generation coming, they want to work with a human, fiduciary, thoughtful, personal advisor. If we as advisors have these tech tools like AI that allows us to run our practice more efficiently, to free up more of our time, I think it's a win for everybody. I think it's a really exciting development for the industry.
Certainly been a boom to the market this year as
Oh, yeah,
well. So
for
I
sure.
think if we've been participating in that, we have appreciated that. But Dean, I appreciate the time once again, ladies and gentlemen. Dean Zayed, president founder of Brookstone Capital Management. Just a pleasure having you on the program, sharing your thoughts with us. Thank you very much, Dean.
Always a pleasure, Peter. Thank you.
Well, great interview there, Chris, with Dean Zayed. A little look behind the curtain at Brookstone Capital Management. I know they are a huge resource and an opportunity for you to continue providing the valuable services that you provide to your clients, proactive savers and investors. And circling back to the beginning of this program, we started the conversation talking about Roth opportunities. I know that there are a lot of complexities with this. I know that every Roth consideration is situational, specific. You help people work through all of those issues and try to keep as much of their money in their pocket and in their accounts as possible.
Yeah, absolutely. And, we couldn't do it without the service and support we get from our partners there at Brookstone Capital Management, some of our quality CPA relationships, and you have to be able to understand, what does somebody's tax return tell you, so that we can do some of this critical thinking on our own as well. Because remember, once you hit age 73, right, the government requires you to take money out of that distribution. You cannot take that money and put it into a Roth IRA. Okay? You would have to take money over and above that. Now, was born in 1965. My required minimum distribution will be at age 75. So, for some of the other baby boomers here, they've got, they won't start taking RMDs until age 75. Now, I think it's the year 2033 or 2034, Peter. I can never remember that one. So there's quite a bit of tax planning in here right now available for, a lot of folks that are listening to the show. And believe me, when you get to be age 75, the last thing you want to do is add more income to your needs, especially if you're not spending it.
Yeah, and if we're talking required minimum distributions, Chris, this is again a requirement. This is the IRS's plan to harvest the most possible from you. And if we're dealing with RMDs, we're likely keeping our expenses pretty low or already have other income to live off of. This is something that is placed upon us so that the IRS can collect. Maybe just because they keep moving the date back doesn't mean that we should wait to default and defer to the IRS's plan. It might not be the one that's in our best interest, in our favor. So that's why, again, ladies and gentlemen, while this is a great opportunity, unfortunately is often overlooked or ignored, and it should not be. It can be a significant, substantial amount of savings for you. So explore your Roth options. Get that Roth retirement roadmap. Chris McIntire puts that together along with your game plan for retirement there at McIntire Retirement Services. All you need to do to get the conversation started, pick up the phone, give a call, 419-332-0532, 419-332-0532, 419-332-0532. Chris, most people can tell us how much they have in their retirement accounts in pretty close proximity. Very few people have actually mapped out how much they're going to pay in taxes. That's something that people should know.
Absolutely. It is an important part of the whole equation. And for you algebra teachers out there, you want to solve for the unknown. And, that's part of it. If I'm going to pull out X number of dollars on a gross dollar amount, what do I have to pay to the government to make that withdrawal? And, there's a lot of good advantages right now, a lot of good planning opportunities. So be proactive, not reactive, because your plan is probably better than the default plan that is out there.
And if for whatever reason you think maybe this doesn't apply to me, or I can't take advantage of this for whatever reason, whether it's income or age, explore those options. There's almost always a way. So give Chris McIntire a call, 419-332-0532, 419-332-0532. Get your game plan for retirement, your Roth retirement roadmap mapped out for you. Again, 419-332-0532. I want to give one more special thanks to Dean Zayed for dropping by, joining us here on the program. And as always, Chris, thanks to you for being the constant resource for proactive planners, savers, and investors across Northwestern Ohio.
Hey, my pleasure. Thanks, everybody. Thanks again, Dean, and may God bless America.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Investment in notes involves risks not associated with investment in ordinary debt securities. The securities are not bank deposits and are not insured by the FDIC or any other government agency, nor are they obligations of or guaranteed by a bank. The securities will not be listed on any securities exchange, and there may be little or no secondary market for these securities, and secondary trading may be limited. Accordingly, you should be willing to hold your note security to maturity. These securities are subject to the credit risk of the issuing bank, and any actual or anticipated changes to its credit ratings or credit spreads may adversely affect the market value of the securities.